Right, first up, America to get real-time payments by 2024. So the Federal Reserve have said it will build and operate a real-time payment system by 2024. This is real future-looking stuff here. Big banks have argued that the Fed's involvement will slow adoption of real-time payments in the US, which already lags behind much of the rest of the world. And small banks and credit unions, feeling that this system will not treat them fairly, have so far refused to sign up to the big bank-owned system. So, what do we think? Joy, I guess you've got origins closest to this area.
It's a very interesting development. Obviously, the clearinghouse has launched its own real-time payments in 2017. The clearinghouse has is like a membership organization, so it has the big banks on board. They have like about 24 that have signed up to it. I think the Fed is being pushed. Maybe by Facebook Libra, that's an idea. But I think that it's also trying to create more competition. So it's interesting. But I have to say, as you pointed out, the timeline is maybe a bit long.
Yeah, so I completely agree with the timeline being a bit long, but when I looked back into it, I thought I've heard this before, and that's because the initial call for comment was only 7 months ago. So they've gone, which is actually very fast, believe it or not, particularly for American legislations. I think they are putting some commitment behind it. That said, if anybody knows anything about American regulation, the speed at which things move is frightening to even people who know about, regulation, which takes time. American regulation is a whole other kettle of fish.
I guess it's another symptom of a market that needs quite a lot more sort of customer benefit brought to it. I think you look at there's clearly things happening there, things like Venmo already doing some sort of peer-to-peer type networks. But I look at things like account fees, like overdraft charges, interchange rates, FX fees. There really is an awful lot of profit being made there at customers' benefit, also customers' cost, and I think that really does need some change.
Also, the point as well that Sam made about the fact that you'll have to be a registered bank to use it. So you have to be a deposit-taking institution, which means you need to have a charter, and then you need to be a member of the Federal Deposit FDIC. I can't remember what that stands for now. But anyway, it's basically the insurance that you pay if you're a bank. Well, that means that most of the most innovative and competitive companies in the States right now, which people are using to make innovative payments to get, speed things up, won't be able to join it anyway. So, and if they do have to join it, they'll have to go through a long drawn-out process of getting that charter, which the regulators in the States show no willingness whatsoever to actually start issuing them. They keep talking about them, but you disagree?
Listen, I think there's definitely openness from some of the US regulators to look at these things. And hey, there's 4 years to get there, so
the point
there's a bit of time.
Is some of the regulators, and that's the other thing about the States, of course, you've got like 4 or 5 different regulatory bodies who fight with each other.
I think we're also being a bit unfair here because we're looking at, hey, the UK's got it. The UK fits inside Texas. Most of the European countries fit inside the US easily. So really what you're talking about here is would be the equivalent of a European-wide faster payments clearinghouse for
but don't
everything.
We have that?
SEPA?
Well, yeah, I was going to say, isn't that what SEPA is?
It's not quite the same.
Actually, one thing that happens here a lot, and people really underestimate it when you go into these working groups, is the pushback doesn't always come from the regulator. It's scary how many institutions, even the most innovative ones, push back and say, we need longer because we're going to need this long to actually implement that. And if we don't achieve it in this time, then all of our competitors are winning.
Exactly. When you've got 10,000 deposit-taking institutions, credit unions, small mom-and-pop shop banks, then all of those guys are going to obviously push back again. They don't want to have massive IT spend. Ideally, actually, the status quo, just keeping for them, would be a better solution, wouldn't it?
I think that's a really good point, actually. You see it actually in all countries where you get small and mid-sized companies that then get subject to this sort of change, which is in some ways trying to drive more competition, trying to drive more benefit for customers. But actually, if you're a small, mid-sized institution with more legacy technology, it's actually very hard then to take the cost of doing it.
But I also think that the small, let's say the community bank, that whole community and stuff, like they don't want to have to go through another institution in order to get access. They want to have direct access. And I think they've been pushing back against the clearinghouse and its real-time payments network because it's really the big banks, even though it's open to the smaller ones. But I think it comes down to that kind of spend. But the whole thing is I think the Fed will allow those banks to join. And I think they're the ones that are pushing forward.
And I completely agree because if you look at the systems that have been set up, so two types of system generally for faster payments. For faster payments is what we call it in the UK. But you've got got the sort of the central bank or the regulator organised ones, and then you've got the private ones. So in Australia, they finally had faster payments come in a few years ago. They have a system called MPP, which is run by 13 of the biggest banks. But what that means is that if a fintech wants to join, they have to pay up to $1 million to join this faster, their equivalent of faster payment, their instant payments, if you like. So it's all very well and good having these private systems, but when you look at those small people who, as I said, are doing the innovation and the competition, they're instantly boxed out by it.
So they are. And the first thing when I was looking at the article, the first thing that went through my mind was, right, it's elitist. It's blocking everyone out. But on the flip side of it, anytime you go through any of these things, for example, banks passporting into the UK and wanting to, well, they still can, and wanting to take part in FPS, the whole program and the whole thing about getting that is really hard because you have to go to one of the existing clearinghouses and then comply with everything they want, which is almost impossible because you're talking about 200-year-old monoliths.
So the compliance man. It's impossible to comply.
But I mean, you look at this and you say, look, this is just bits and bytes traveling across a cable. We've got the internet. It's easy. But on the other hand, you say, hold on, this is the integrity of the financial system. This is anti-money laundering, counter-terrorist financing, all of those things. So it has to be super secure. And also it's in a highly regulated area that not everyone can join, because suddenly if fintechs join willy-nilly, then money's flowing to bad places. So it's an interesting tension for me, because on one hand you say, well, 4 or 5 years, like the world's moving on, all of these alternate payment schemes of, Amazon Pay and Alipay and, MasterCard and Visa pushing things through. You've got to think, even Ripple as an example, you've got to think that there will be other networks that come along in that time period that have a good shot at doing something. But I guess with as a backdrop, you've always got this pushing things along as well.
I guess I'm going to help us link to the next story here. But for me, we're talking about this kind of challenge of smaller players, cost of doing these sort of things. I mean, is it not true that ultimately many things in FS are kind of a scale game when you get down to it? You've got to be able to raise large amounts of money. You've got to be able to get to scale that gives you efficiency on economies, no matter what your tech stack is, be it legacy or new. Ultimately, I guess, while there may be thousands and thousands of kind of players trying, only a few will actually make it a scale in the long term.
Well, you've got to think the US is going to be a bloodbath at some point. I struggle to see how 10,000 deposit takers are going to survive in a world that's moving towards digital banking.
There is definitely already consolidation happening, especially amongst the community banks. So that's already happening. But I have to say, some of them exist. It's like a one street town, and that has a bank in it, and it's a local bank, and it serves local people. And until the big banks actually want to serve those communities or can serve those communities at a proper price point, you just think that those still will exist.
I was going to say, if you compare it, away from a British model, which is the big banks and some challenges, and put it towards the European model, take Germany as an example, where you have every village has a tiny little regional bank, but some of those have got billions in deposits because they'll have some huge corporation which has never moved their bank. And they just come to an agreement that they work together. So then they end up having faster payments between them. And that's how they kind of went around it. They created an association.
Moving on. Klarna's new